Greetings. Welcome to my weekend market recap, 23rd December 2023. That's a nice day again, 2323. I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. In the ideas that I share through these channels, I try to combine forces from multiple dimensions, from technical analysis, market preferred trading direction, which may be different from market strength, sector industry score, fundamental score, and even sometimes seasonality score. Because I combine forces from multiple dimensions, the trades tend to be truly high probability trades and they tend to be with high success rate. And if you are following me on the YouTube channel, on the X platform, or on my website, you would already know that. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It's not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. For identifying the high probability trades I described, I use Q systems, which has multiple components, and only Q systems. All the Q components run on the Metastock platform. The technical analysis component runs on TradeStation as well. I use Q systems and the trades tend to be high probability trades with quite high success rate, you may find. Now this did not happen in a day or a month or a year. It took time to reach that level of success rate, and along the way I learned from many people. I went to paid courses, and more than that, I would say even more than that, I learned from the interaction with many successful traders who were willing to share their own systems, techniques, their learning, risk management, etc. Some of them shared with me privately, most of them. However, one gentleman, Dr. Jeffrey Scott, shares his analysis and insights publicly, and I always say quite publicly that his videos are the only videos I watch every week. He's the only one gentleman whose videos related to trading I watch every week. He makes weekly market roundup videos which you may find in this channel. What is interesting is that when you trade successfully using a systematic approach, you may or may not be using the exact same Q systems that I use, but we would find tend to find similar stocks. May not be the exact stock all the time, but similar stocks, especially if you are finding these truly high probability trades where multiple dimensions are aligned in favor of your trade. In the last weekend's market recap, I showed using objective database analysis that the market was very overbought and I did not want to share bullish ideas. It was overbought market, but there were not enough bearish signs, so I did not look into short trades also. But I did mention one stock. I didn't mention the ticker, but I did announce that I did buy one stock. That was a high dividend yield stock. Let's start with that stock. It happened to be ASC, high dividend yield stock. My last market roundup was here on the weekly chart. In the daily chart, it was here. As you can see in the weekly chart, it was right below the trend line resistance. In fact, at that time, the daily also had the equivalent trend line resistance. A longer term trend line resistance is always there in the shorter term time frame also. So one reason you may now know why I did not want to announce the ticker publicly was because the trend line resistance was just above my entry price, and usually I say that I don't like to buy when a trend line resistance is just above price. This was an exception. And why did I take this exceptional trade? It seemed to in a way contradict my usual guidance. The guidance is still valid, but in this case I did the contradiction myself for several reasons. And the most important of those reasons was that it was a very high dividend yield stock and I was willing to hold the stock even if it fell down. I was not going to get stopped out using the Q protection signal. I was willing to hold it long term and therefore I was not so worried about the trend line resistance in weekly. Other than the trend line resistance, you can see that right on the day when I bought it, it had a flow trend following long setup. It had nice trend line support from many direction lines. Yellow direction line was also below it. I think it was a fan out day as well. The industry was strong, and if you look at its fundamentals, I did do all these analysis before I bought. This is ASC, the same stock using Q Vital. Great valuation, robust earnings quality, a short squeeze potential, funds were accumulating. Even now, the dividend yield is 7.7%. At that time, if I remember correctly, it was about 9%. Stock has gone up and dividend yield has come down. Profitable company. And even now, as of Friday's close, majority of the stock pairs went up. When I bought the stock, the industry was one of the strongest. So it was a 360 degrees trade. Industry was one of the strongest. Fundamentals were great, including a high dividend yield. Technically, everything was all right except a trendline resistance just above price, and on top of that, if you look at the momentum signals, Dr. Jeffrey looks at them. In fact, I built the momentum signals addendum to Q systems after learning of this approach from Dr. Jeffrey. That's why I mentioned about him more again today. Right when I bought it using the Q trade setup. Q has trade setups and these momentum signals give possible buy points. On the day when I bought it, it had let's count how many green dots. 1, ESAR reversal. 2, pocket pivot. 3, Mobo breakout. 4, Kahuna. 5, Bongo. 1, 2, 3, 4, 5. 5 green color signals. 3 is enough. And it was coming out of a squeeze. These 3 itself, Mobo breakout from a squeeze with a Kahuna, they themselves are often good enough to buy when the stock is going up after pulling back. So I did look at that also. All these are available not only on the Q charts but on the Q finder, both based on Metastock as well as based on TradeStation. So that was my decision to buy. And as I mentioned, I didn't only buy the stock based on dividend, I did sell out of the money call, therefore making it a covered call, which effectively meant I had an even higher dividend yield on an annualized basis. That was going to be much more than 10% dividend yield if I kept on selling out of the money calls when I bought the stock. So that was a trade I took, and I closed the trade in this week with a decent profit. On Wednesday, I in fact tweeted saying that I closed all my long positions. I started closing last week itself. This was one stock I bought on last Friday, 1 week ago, not this Friday, the one prior to that, and I closed that also on this Wednesday. Interestingly, ASC was also one stock that Dr. Jeffrey mentioned in his video of last weekend. Let's look at my tweet on Wednesday. I am quite proud of the fact that I declare what I am going to do, or I hint what I am going to do, and I follow through on them. I review those same stocks often, or you may check them out yourself, the outcome, and they tend to be quite high success rate trades. On December 20th, that was Wednesday in the morning session, EST, Eastern Standard Time, I very clearly stated that Q market percentage chart and Q edge over the last few days showed the market to be overbought and very volatile. What did it mean to be volatile? Market is always volatile in one way or other. On 1 minute time frame, it is always going up, then coming down, going up, coming down. What did I exactly mean here to be volatile? That has to be seen in the context of what I shared. What I shared was the market percentage chart. It shows in real time during market hours, and thanks to Mr. John, as I mentioned, I learned over the years from many people. Some of them share publicly, like Dr. Jeffrey Stock, and other inputs I got from many traders over the years. Mr. John, who is an active futures trader, also mentioned he was interested in looking at this kind of chart, so I developed it on Q Systems, this market percentage chart. This is what I shared when I mentioned that the market was volatile. What does it show? It shows in real time how the major indexes, S&P 1500, Dow Jones Industrials, S&P 1500, Russell 2000, Nasdaq 100 are moving along with a mega cap custom index. The last part is important. The mega cap custom index has a huge impact on the market indexes that are market cap weighted. Which are they? They are S&P 500, Nasdaq 100, I'm not sure about S&P 1500, but S&P 500, Nasdaq 100 are very much influenced by mega caps performance, more so for Nasdaq, but also highly for S&P 500, whereas Dow Jones Industrials and Russell 2000 are not mega cap influenced. Russell 2000 does not have any mega cap, and Dow Jones Industrials is not market cap weighted. So one way futures traders may use it is to see how this white line, mega cap custom index, is moving right after the market open. Like on this day, that is Monday. Here I shared it on Wednesday. On Monday, mega caps were super strong. So if one wanted to go long the futures, one could go long using ES futures or NQ futures. They would not like to go long using DIA YM or Russell 2000 RTY futures. On a day like Tuesday, when the mega cap custom index was relatively weaker and RTY was much more stronger, one would like to, if one was going long, and of course on both of these days, overall market was bullish above the 0% line, so one would only go long. But on Monday, one would like to go long using ES or NQ. On Tuesday, one would like to go long with RTY. And here comes Wednesday again, when I'm sharing this chart. Mega caps started hugely outperforming again. Notice the last few days, all the indexes and the mega cap index, they were mostly positive, largely positive throughout the day. But on Wednesday, mega caps started going up, that influenced ES and NQ, which initially declined but were pulled up because of the mega caps. RTY came down hugely and later on recovered as the other indexes were also going up. Now, this kind of mega cap outperforming, then underperforming, then outperforming didn't happen only on Monday, Tuesday, Wednesday, but this was happening for quite a few days. That was not a sign of a healthy market. Too volatile when the market was very overbought, and the overbought situation was not seen from this chart. This is a real-time chart. Overbought situation was seen from multiple Q analysis that I shared in the previous market recap, also from market breadth, from Q edge, from Q finder, etc. I'll do that today also. So on Wednesday, I closed my all long positions, and I mentioned that I would wait for a pullback before attempting new long positions. That was the general statement looking at the overall market view. Could there be exceptions? Yes. Could I buy some stocks on Friday? Or rather, did I buy some stocks on Friday? Yes, I did. But those are exceptions under exceptional considerations, just like ASC was 1 week ago. Now, last week I mentioned the market was overbought. Why did I Wednesday choose to close all my long positions? Again, Friday I might have bought, I did buy some, but on Wednesday I closed all. Let me come to that now. What was so special about Wednesday? By the way, one, I think, very powerful feature of Q systems taken together as a whole is that the ambiguity with which traders can decide their market direction. And this ambiguity is based on a lot of past observations that I shared publicly over the years. What was so special about Wednesday? Few things. Let's start with one. Let's look at DIA. I may go back to market global markets after some time. I don't think I look at many stocks to trade today, not in the USA market stocks at least. But let's look at the special thing that happened on Wednesday for Dia. Let's look back before looking at Wednesday. Here, the market was dropping sharply in the weekly chart, and that drop was reflected in the daily chart. Right at the bottom, and not now, but then in the market recap, I mentioned that Dia gave the clearest signal to buy right on this day because why? Because it came near jump thrust low and then suddenly went up with big move up 3 with a bullish headwind, bull release, bull release signal, bullish pressure, and a false downside breakout. All these I mentioned at that market recap. Then Dia hugely went up, and I showed in the last market recap for many days it remained overbought, shown by the stretch signal. Not even for a single day did it show the bear release for all these days. But that changed on Wednesday. Many things changed. What happened near the bottom, the signals could capture the very low of the market for Dia. The exact opposite signal, even worse, in fact, came at the top. We had the bearish headwind. Earlier, we had the bullish headwind at the low. We had the bear release. Earlier, we had the bull release at the low. We had the big move down 3, the parent of all bearish momentum. Earlier, we had big move up 3. What was worse than last time? We also had on Wednesday a bearish reversal. We did not have a bullish reversal at the low. We were reversing from price extreme high. At the low, we were not at price extreme low. So if you look at the signals on Wednesday, they were even more bearish at the very top than we saw using the similar or same rather Q signals at the bottom. At the bottom they were bullish, but relatively less bullish than we had at the very top bearish signals on Wednesday. This came in Dia. Did the trend change on Wednesday? No. Did the trend change at the very low when all those bullish signals come? No. It was still in a downtrend, and it could almost perfectly catch the low. Will it happen again? I don't know. But this pattern has never failed so far in my observations in stocks. Now, of course, Dia is not a stock. What does it mean? What is the difference between an ETF like Dia and one particular stock? When I say this pattern has never failed so far in my observations, I am talking about Q360 degrees trades. So after this pattern, if I have a bearish setup, that has not failed. We don't have a bearish setup yet, and also when I talk about a Q setup, it is not only a technical setup. The stock I short at the top is also fundamentally weak in weak industry, but that is not applicable. Those two factors of being weak industry or weak fundament not applicable to Dia. So it is not required for me to have the applicability on Dia, because anyway I am not so much keen to trade the ETFs. But when I see these signals at the very top, I may look at industrial stocks that are fundamentally weak in relatively weak industries and look for proper Q 360 degree short setup in them, and if they happen to be at the very top, I would like to use defined risk options trades rather than outright shorting the stock. That is what I tend to do for reversal trades. Now, not only Dia showed these signals on Wednesday, IWM also did. And what are the two things common between Dia and IWM? I mentioned that earlier. They are not influenced by mega caps. Let's look at IWM. Again, look back. In the weekly chart, in this area, IWM was sharply falling, the weakest of all market ETFs at that time. In the daily, it was also falling. Then suddenly came at jump thrust low, and in case of IWM, we had price extreme low also. We didn't have price extreme low in Dia, but in IWM we had. Then came big move up 3. Since then, price has hugely gone up. What happened on Wednesday? We had jump thrust high, price extreme high, big move down 3. A mirror image, opposite image of what we saw at the very bottom. On top of that, what we did not have earlier at the bottom, we had a reversal candle at the top. That was also an alert that came on Wednesday. They did not come on QQQ or SPY. We had a bearish headwind and bear release in QQQ at price extreme low, but we did not have big move down 3, and QQQ is not at jump thrust high. I mentioned in last two market recaps, if this trend line support is broken in QQQ, I look to short QQQ constituents, which may also be at the top. The pattern did not come in SPY also. It is at price extreme high, approaching jump high, not thrust high, and we did not have big move down 3. So one may conclude that SPY and QQQ did better because they are more influenced by mega caps. And if I look at the mega cap custom index that is part of Q Global Market Breadth, that is steadily going up. Again, like I mentioned in two previous market recaps, if this trend line support is broken in daily in the mega cap custom tech index, most likely QQQ trendline support will also break, and that would be the time to look for shorts in mega caps, which are also at price extreme high for many of them, which would also be the time to probably look at QQQ constituents, look for short opportunities at the very top. Those were not the only reasons to close my long positions on Wednesday. Let's look at the market breadth total view. A very powerful single chart view of internal market health. Unbelievable, I think unbelievable amount of insights is captured in this single chart. Nothing about a stock, not even an index, it's about most market internal health check chart, most internal analysis probably possible. In the last market recap itself, I showed that from all angles, whether it be the percentage of stocks above 50-day moving average or 3-month new high low, they were already at upper extreme. We also had, thanks to Mr. Ian Woodward, the euphoria signals coming. We even had, let me clear the charts, the drawings, we even had one phoenix signal at the very top. That was bearish, though that candle shape itself was indecisive. But on Wednesday, something changed. In this extreme overbought internal check of the market, on Wednesday, we had another phoenix with very bearish shape candle, and which we did not have earlier, a very high distribution count of 4. In fact, if you look back, remember the low where we had the opposite bullish signals, big move up 3 in DIA, in IWM. Since then, if you look all the way up, Wednesday was the only day we had a large distribution count. And my hypothesis is that whether be it at the very bottom, huge buying through big move down, huge buying through big move up 3, or at the very top, huge selling through big move down 3, they don't happen because of retail traders like me buying at the bottom, or retail traders like me selling at the very top. Those are done by very big market players with more information about the market than I have as a retail trader. So that was another reason something changed on Wednesday that influenced my decision to close all my bullish positions. It is remaining overbought from all angles. We did have an accumulation count on Thursday of 2. However, Thursday's candle could not go above Wednesday's high. And on Friday, we have a very indecisive shape doji candle. Doji candle at the very high is not a bullish signal. Doji candle at the very low would be a bullish signal. Doji at the very top can be a bearish signal if in next few days the market drops. I did not wait for that. My philosophy of buying and selling stocks is I try to close the trade when I comfortably can, not when I have to. That's why I tend to book partial profit quickly when I have a decent profit, not using trailing stop on the entire position, because that would be tantamount to closing when I have to. I don't like that. I don't want to close when I have to. I like to close when I can with a decent profit. Another thing that I showed on this chart in several market recaps, that is true now also, if we look at the growth versus value, when this line is going down overall, slightly going down, not going up, that means growth is underperforming. That is not the sign of a bullish market. In a bullish market, growth stocks tend to do better. Now, value stocks are doing better, slightly better. And small cap versus large caps, small caps are doing well and mega caps are doing well. But the majority of large cap stocks, other mid cap stocks are not doing well. That's what we can see. So Wednesday, all these things happen, and Q Finder also showed many bearish signals. That was a reason to, that also motivated my decision to close all bullish positions. Now let's look at a few things. Let's look at the reason why I don't like to look at ETFs if I have a corresponding index. The index, I think, tracks the market a lot better than the ETFs. ETFs have tracking errors, sometimes huge. And yes, you may look into the internet through different websites to try to find a reason, but that is a wastage of time in my view when we have the indexes available. They are much more reliable, and I will show a very good example here today. UUP, the dollar index ETF. And this is what you can see not only on TradeStation, on Metastock, which is the definitive very reliable data. You would see the exact same pattern. Dollar index hugely, the ETF hugely dropped on Monday this week. How on earth can dollar index drop so hugely in one day? Something doesn't look right, and that's why I don't like to use ETFs if I have the indexes. Yes, SPY, QQQ, IWM, they are okay. They very well track the futures or indexes, but I do look at the futures for these market ETFs also every day. UUP is one thing I don't like to use. I don't look at UUP. I like to see dollar index. UUP chart, something is not right, and if you look at UUP on, I think, any other platform, it would look the same. Trying to make meaning of this will be not only futile, it will be harmful in my view. Whereas look at the dollar index chart that I look at every day. I share it in most market recaps. First, look back. That shows the true power and profitability value of the system. When dollar index dropped here, it broke below the triangle pattern. I was bearish on dollar from that time. That was a reason to be bullish on the market. It was a dead cat bounce. I mentioned it before the drop happened. When it tried to go up, I kept on mentioning that because of all the declining direction lines, and more than that, I specifically mentioned because of the declining trend line resistances in Q systems, dollar would more likely than not continue to come down. And I was aware of this weekly trend line support from all these points. This very long term trend line support, two of them were already there. They are also in the daily chart. On Friday, it precisely hit the top of the two trend line supports, which are in close proximity in daily weekly, stopped right there with a bullish indecision at the bottom. Remember, bearish indecision at the top can be bearish if it is followed by down candle. We will short if we have a proper short setup, and a bullish indecision at the bottom may turn out to be bullish if it is followed by an up candle, and we will buy, at least I will buy if I have a proper buy setup. But in this case, even if dollar index goes up on Monday and or Tuesday, I would not buy because the trend line resistances are very close. Remember, if trendline resistance is nearby, I don't like to buy. ASC, I explained, was an exception because I was willing to hold it long term because of its dividend yield. UUP is not a case like that. So I am not going to turn bullish in dollar index unless this trendline resistance is broken. At the same time, because it is right at trendline support and stopped there with a bullish indecision, I am not bearish anymore on dollar index as I was here, here, here. I am neither bullish nor bearish on dollar index, and even if this is not broken but dollar index goes up for 1-2 days, that will put pressure on the market, which is very overbought. I was aware of all these factors when I decided to close my long positions on Wednesday, and this is also one reason dollar index, the UUP chart is useless in my view. The dollar index is much more reliable, and on Q Global, on Metastock, we can plot any symbol in any country, any market, any index, any future, any stock, any ETF. That's one reason I love the Q Global on Metastock. Dollar index is very useful also. That is also preventing me buying any more now. Except there are always exceptions, probably using Q systems you may always look for stocks to buy if you are only long traders. Some traders don't want to short. Let's look at the global markets. That will lead us to possibility of looking at some buying options, buying stocks, I mean, options for buying stocks. Let's look at all ordinaries. Australian index near jump thrust high, price extreme high, showing bearish indecision at the top. Weekly is at the watermark resistance where a bearish headwind pushed price down a lot earlier. Not a time to buy. Now if you look back right here, when price was supported by trendline support and there were many direction lines creating a bullish fan out, that time I was willing to buy, as I mentioned in the market recap at that time. Now it is too overbought with indecision. I would look to short if I have a bearish setup here. I will not have a bearish setup in the index probably so easily unless there is a headwind short setup at the top or a pound short setup at the top. But if the index starts to fall, I am quite confident I will be able to find individual fundamentally weak stocks giving short setups in weak industries. Not a time to buy. Trend is up, but not a time to buy. My preferred trading direction will be bearish if it starts to go down. Japan's Topix index. Again, the proof of the pudding is in eating. When market was here for Japan, all this time I was bearish because of the trendline resistance. It has not fallen a lot, but it has not gone up. It has fallen slightly. So the bearish trades would have been profitable because we would not trade the Topix index to short the market. We would look for weak fundamental stocks in weak industries, and that would likely drop more than the average index itself. Anyway, those trades would be profitable by now. Now it is not at the upper edge of a range. Now it is in the middle. So now I would not like to buy or short. I like to short at the upper edge of a range. I like to buy at the lower edge of the range. In the middle, it's a no trading area. Direction, sideways, preferred trading direction, none. And this analysis is important. This is what we apply to individual stocks also. Let's look at FTSE index, UK market. Earlier, it was inside a range, and I mentioned I didn't have any preferred trading direction. Now it has broken out of the triangle in the weekly. There is no resistance trend line nearby. However, the weekly candle has a long upper tail for 2 successive weeks, and the daily is already overbought at upper boundary, overbought from stretch signal at upper boundary, and on Friday we have a bearish indecision at the top. So that is not a time I'd like to buy. Direction uptrending now. Now it is not sideways anymore because it broke through the trendline resistance. It's clearly uptrending now. However, too overbought with bearish indecisions for me to buy. Direction uptrending, preferred trading direction, none. India's Nifty 50. Once again, India's Nifty 50 is the most bullish of all global markets. Interestingly, and I mention it sometimes, that India market sometimes signals what may happen in the USA market. On Wednesday, an India market closes before the USA market opens. On Wednesday, India market had jump thrust high, price extreme high, then came all of a sudden a big move down 3 with bear release, bearish pressure, bearish reversal, bearish flow. almost identical signals that were followed in IWM and DIA in the USA market. So that is why I keep an eye on exceptional moves in the Indian market, because India market is moved heavily by foreign investors. Many of them are US investors, the large players. So I would hypothesize that this sharp drop in the Indian market that preceded USA market was caused by the bigger players in the USA market. In fact, if you looked at the data that is publicly available on Wednesday, domestic institutional investors bought while foreign institutional investors sold. The foreign institutional, of course, somebody has to buy if somebody else sells, but that also supports the view that foreign investors decide a lot about market suddenly coming down in India. That's why I keep an eye on the India market to have some sudden moves, like in this case at the very top, to anticipate what may happen in USA. Of course, the actual trades in USA are taken based on USA market analysis, but this is some signal that is worth noticing. Interestingly, very interestingly, in fact, before that huge drop happened at the very top, in fact, the market was at all-time high on Wednesday, all-time high, not 52-week high, all-time high. The huge drop happened, but the bearish headwind, very interestingly, came 2 days prior to that, and on a closing visit, I think it's almost perfectly caught the very high, not the very high that would be the Wednesday's high, but on Monday itself the bearish headwind came. That was a signal, not a trade setup if you applied the checklist. So guideline is to protect existing long positions using trailing stop. India market direction is of course still uptrending, but I would not like to buy now, because again this pattern has never failed so far in my observation for individual stocks. Nifty 50 is not a stock, but still these are two heavy selling signals at the very top for me to buy now. Now I kept China market for the last, isn't it? Usually I look at China market before India and UK, but there is a reason. A reason why I left China market for the last global index, CSI 300. And see the value and power effectiveness of Q systems. Here I was bearish using the flow setups. When price came here, market was sharply falling, but I mentioned publicly in the market recaps that I am watching that it is at jump thrust low, at price extreme low. I am looking for a big move up 3 and looking for a break up from this trend line resistance. We had the break up from trend line resistance on Friday. Let me clear the lines again, maybe expand it a bit. We had the technical breakout from trend line resistance on Friday. However, Friday's candle is very indecisive. So I need the price to go above Friday's high to be more confident of buying stocks in the China market. Need price to go above Friday's high. Now, once again, before the breakout happened on Friday, the bullish headwinds were signaling that an up move may come. It did not give any bullish headwind buy setup, because you don't buy just below trendline resistance. The trendline resistance is broken, but because of the indecisive candle, I look for market to go above Friday's high. Interestingly, in the weekly, we have a bullish indecision at the bottom, and weekly is also near jump thrust low. That is very oversold situation. And last few market recaps itself, looking at all these signals, I was waiting to buy some Chinese stocks. As I mentioned, I was not going to buy any US stocks, but some of the Chinese stocks are listed in the USA market. Do they have perfect buy setups? Maybe, maybe not. I didn't look at all of them, but I would like to consider buying strong fundamental stocks, preferably those that funds are accumulating. These funds are very knowledgeable, much more about what is happening macroeconomically in that industry sector. They are meeting all the executives. They have huge industry knowledge. If they are buying, especially if they are buying at the very bottom, I take it very seriously. Now, China market is at the very bottom. Let's look at this very well-known stock, Alibaba. Ticker is BABA. Analyze it using QVital for fundamentals. Nothing, no data is stored on my computer. It is going to connect with Refinitiv, retrieve data, carry out the analysis and present me the scorecard. Now on Friday, 48% of PR stocks went up, but that is fine. These PRs are United States PR stocks. United States stocks I am not willing to buy anyway for all the reasons I explained. This is listed in USA, but it is actually a Chinese stocks. Middle valuation, robust earnings growth in the last 3 quarters. Not very high, but you may see consistent and positive. Not very low also, above 20% earnings growth in last 3 quarters. Some dividend yield, of course a profitable company. Only 7.4% above 52-week low. The China market is very much down and BABA is also very much down. Only 7.4% above 52-week low. And what caught my eyes, as I mentioned, if funds are buying a stock at such a low price level, they may be aware of something that I don't know of. But I don't buy based on only that. I would like to buy with a proper buy setup because funds may be accumulating even when the stock is declining. They need to do that because their fund size is huge. They need to buy a lot. I don't need to do that. I will wait for a proper buy setup. But the fundamental scorecard gave me enough reasons to consider buying BABA after looking at the China index. Let's also look at another very well-known stock, Baidu. Again, a Chinese stock but listed in the USA. Again, for Baidu also, 42% of peer stocks went up on Friday, but I will ignore that because these peers are in the USA market. Most of them will be in the USA market, actual USA stocks. But Baidu is actually not an American stock, it's a Chinese stocks, and here the fundamentals are even better than BABA. BABA's valuation was yellow, here it is cyan, more interesting, more appealing, more strong in terms of valuation. Steady earnings growth again, profitable company. Again, what caught my attention, funds are accumulating, and BABA was about 7% above 52-week low. Baidu is about 11% above 52-week low. So if we get now a buy setup in these two stocks, and you may look at other Chinese stocks. I am not going to look at all the Chinese stocks listed in the USA market, but I think you get the point from where I am coming. After looking at CSI 300, after looking at these two stocks fundamentals, I would like to do two things. One is look at these stocks industry strength in the China market, not in the USA market. Remember, Q Edge allows me to look at the sector industry rotation not only in the USA market but many other major markets in the world, and China here is one of them. So I could and I would like to, before buying Baba or Baidu, create the industry sector scorecard for China and see if Baba and Baidu's industries are strong. If so, fundamentals are strong. The last thing that I need to do is to look at their technical charts to see if they are giving proper buy setups. They may not be giving yet. Remember, the index itself has not told us to buy yet. But let's look at Baba. Came near jump thrust low, price extreme low. No big move up 3, but big move up 2. And this one was associated with a gap up, and that gap is holding so far. Is it in a downtrend? Yes, of course it is in a downtrend, very close to 52-week low at price extreme low. The index itself is very much in downtrend. So I was not expecting Baba to be in an uptrend on the chart. But in my view, if the Chinese index starts to go up now, and if Baba can clear out of this congestion, I don't personally need to wait for these trend line resistances and then these and these to be broken. I would not mind taking a position in the stock, maybe using short puts if I'm willing to hold it long term, if I get exercised, or short put vertical, or outright buying a small position, relatively small position in the stock if it goes up with the other conditions I mentioned earlier. Industry in China market has to be strong, CSI 300 has to go up also. So this is one stock I am watching, and sometimes, like some other traders, I may take a small exploratory position to keep an eye on the stock. I might have done that in some Chinese stocks on Friday itself. Let's look at Baidu's chart. At price extreme low and reversing, interestingly, at the very bottom, we had the bullish headwind. Caught the very bottom of the stock. Price went up significantly to give a profitable long trade. We could buy on the bullish headwind day if a setup was confirmed, or we could buy on the next bullish flow day, one of these 2 days, if the stop loss was nearby, and stop loss would be nearby for sure on this day. Maybe on this day, I'm not sure, but on this day, stop loss would be nearby somewhere here. On this day, stop loss would still be below the headwind signal low. That would be a bit far, but on this day would be the proper day to buy using Q techniques. Already we had higher high, higher low by that time. That would be a profitable trade. Then it pulled back, but the trend line supports are holding. And yes, trend line resistances are there, as I mentioned, they are expected to be there because I'm trying to buy the stock, Baidu, Baba, these stocks at a very low price when the market is also in a downtrend in China. I'm watching this stock also. If these trend lines are broken, which are much closer to the current price than for Baba, then I would be able to buy. And because it has many trend line supports, it is possible to consider a short put vertical trade now also, anticipating that these supports will hold. In that case, the short put vertical may be a low risk trade one can take now because of the inherent time decay in the position. Even if it continues to stay inside this broader triangle, this trend line resistance, this trend line support, short put vertical may still work out. So I am getting ready with multiple Chinese stocks to buy, not American, I mean proper USA market stocks, because see how I am trading. I am buying or looking to buy in a market that is hugely oversold, China market, and not buying in a market that is hugely overbought. I didn't look at the other market dimensions. Let's quickly look at that. I'm already at 1 hour point, but that is okay. The aim is not to look at stock so much, but to learn to trade first. Once you learn to trade, you know how to make profit. Let's look at sector industry stock advanced decline breadth using QH. It is very bullish. No bearishness. If next week we start to have red pies across the board, then that may be a signal to short, but we are not there yet. Bucket analysis, no overbought, oversold signal. It is bullish. We know that already from the market analysis. Q finder, technical breadth, weekly picture, bullish across the board except the reversals, but not enough reversals to be concerned yet. Not enough reversals to consider short trades. That is weekly picture and daily picture. Again, bullish across the board except reversals. Here we have a little bit of concern, but not hitting the threshold yet for headwinds. But one concern that is remaining is the overbought condition. We already knew that. But here also it is showing too many stocks are at jump thrust high. So from all market analysis, it is overbought. It actually fell heavily on Wednesday when I closed all my long positions, and Friday I might have taken some exploratory positions in some Chinese stocks. That is the essence or secret of my successful trade. Essence and secret of my successful trading. Buy low, buy truly low, and sell truly high or short truly high using objective data. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. Now, next weekend is also the one just before the new year. If I am traveling where I don't have enough good internet or I am too busy with holiday celebrations, then I may also may not have the next weekend's session. And if I don't have it for the next weekend, let me in advance wish you all a great holiday season and happy new year. Have a great year ahead. Have a great weekend. And as I always say, as these live sessions show, there is no reason not to do that. Trade profitably. Thank you.